All right, welcome to the Option Flow and Darkpool Prints webinar. Again, my name is Morano 20. Um, the class was going to be yesterday, but we are here, and I'm going to appreciate all of you that are showing up. And we do have a little disclaimer where, again, everything that we say here is just educational. It's not investment advice. So I'm sure all of you are familiar with that disclaimer. I'm going to share some of the strategies that I use, but that doesn't guarantee, that you're going to make lots of money or you're going to lose money. So take that as just a friendly conversation. All righty. So the outline for today is going to be very simple. I'm going to try to keep it as assuming there are some people who have some knowledge of option flow, and then there are some people who have zero knowledge of option flow. If you are one of those people who know nothing about option flow, don't worry. You can ask questions at the end, or just message me right after the class. I'd love to help you out a bit more. But we're going to cover basics, and then we're going to get into a little bit of in depth. But regardless, you should be able to follow along. And then you can also post questions on the chat, and there will be some people who will be able to help you. So don't feel like you're falling behind. But we're going to start with essentially what is option flow, what is Darkpool, and essentially more Darkpool prints. We'll talk about that. We're going to talk about where you get this information. Then we're going to talk about definition of order types. Then we'll talk about that in a minute. Talk about the bid and ask. This is a very important topic, very important item that a lot of providers of this information don't include that. We'll talk about bullish flow, bearish flow, how to identify this type of flow with the information that you provided, looking at option flow. We'll talk about, and then we'll create a checklist of things to look for when you're looking at option flow to find the most profitable and high probability setups. Then we'll talk about, we're going to jump back into Darkpool prints right at the end. We'll talk about how we can use that as support and resistance levels. So, all right, let's get started. Dun dun dun. Yeah, I wish I had some music. So, but let's get started with option flow. So, option flow is essentially it's called flow because you got lines of transactions that occur. These transactions occur in the market, and it just flows through you, right? And so for a lot of beginners, this information seems like garbage, and a lot of it is, right? But once you start looking at it, you can start getting an idea of what the direction of the market. So what the option flow is essentially a series of recorded transactions of option contracts that were conducted in real time and on any ticker. And these are usually done by hedge fund traders, or it's really just like individual traders who have deep pockets, right? And so you'll see, how many of us, put $12,000, and this is just small, right? But you'll see some, $500,000 and millions of dollars. Most of the time, these are traders who work for hedge funds that they're managing the position. Now, remember, there are companies or companies that do it all, right? They do long positions, they do swing trading, and they have individuals that do day trading, and they have some that do scalping, right? So you got a little bit of everything. And so some of the flow that you will see is that you will see some positions that are open and then close within a minute or two, right? And so just imagine, if you can imagine this, you are essentially seeing people, a trader in their computer who worked for a hedge fund placing a position, buying this amount of calls, this amount of puts. And what this is showing is showing us the transaction that occurred that he or she did. It gives us a lot of information, right? It doesn't tell us who it is, who did that. But this is the equivalent of, you know, when Warren Buffett says, hey, you know, Warren Buffett is going to buy more, what is the AT&T or T, yeah. And you go and buy more AT&T, is the same thing, except in this case, we don't know who that person is, right? And many times, really, I really don't care who it is, as long as the flow is clear, right? Okay, so that's essentially what option flow is. Now, in almost every single provider of this information, you will have the bare bones, the minimum, right? You will at least know the ticker that they're talking about. In this case, you know, open is a ticker. You will have the expiration date of that transaction, of those contracts, the strike price, if it was a call or a put, the spot price, meaning this is the price that the ticker was trading at the time that this was completed. Here you'll have the time. This is 1:59.59. Here we have a procrastinator, right? Waited until the last minute to place that trade. And then you have a little bit of details. Essentially, what this is the number of contracts and the price of the contracts that they purchased. So they purchased 250 contracts at 75 cents each. And this is, they did it at the ask. We'll talk about that in a minute, what that is. The type of transaction was a block. Again, we'll talk about that in a minute. And the total premium that they paid for these contracts, right? So if you were to multiply this times, you know, 250 times 0.75, it'll equal this, right? This is the implied volatility at the time that this was purchased, okay? That's essentially what you're gonna have. You're gonna have the bare bones. This last detail, the A or bid, this is something that not every server has. This specific screenshot is from a service that I use called Black Box Stocks. This is very important, and I wish other services provide this as well, because it's going to help us a lot. We'll talk about it in a minute. Okay, so then we also have Darkpool prints, and sometimes, you know, we don't talk about Darkpool prints as much because you have to, with options, you know exactly what the price is, you know what the intention of this person's, you know, sometimes you can use the strike price of a transaction on an option flow. You can use the strike price as that person's, you know, profit target, right, or targeted price, right? But in Darkpool prints, you don't really have that information. You just have a bunch of huge blocks of trades. So in this case, someone bought 501,974 shares of SPY with the price of 446.55 at 113.25 today. Okay, totaling at $224 million. Now, is that a lot of money? Yeah, I mean, for us, it's a lot of money. But the thing that we don't know is that, was it a buy or was it a sell, right? But, you know, for every buyer, there's a seller, right? And so that person that bought this probably think they're long, and the person that sold those contracts probably thought they're, you know, maybe they're short, right? And so there's really no way to learn what this, you know, what the direction of this. But what matters really is the size. You know, for example, here, this unusual, very large block, right? So we said, okay, it's 224 million is a lot. Well, for SPY, it may not be, but $1 billion, absolutely, right? And so this information can be very, very helpful when coupled with other tools that you already have or you should have as you're learning more, right? Now, why are they called Darkpool? Well, Darkpool is essentially a private exchange. So if you imagine, think about, these companies have so much money. We're talking millions and millions of dollars, right? Let's say you're long T-Dog, you know, someone mentioned in our group, and so let's say you're long T-Dog, right? And your boss, you work for a hedge fund company, and your boss say, hey, you know, I think T-Dog is gonna moon. We need to buy a ton of shares, right? And then you say, you know what? You know, let's use an example here, and let's just change it to AFRN, right? Someone said, let's say one of the hedge fund managers said, hey, I think FRM is going to get, going to partner with Amazon. Let's start a position, right? And so what these guys are going to do is they're going to start a position, but they're not going to go full on, because if they do, if they purchase these shares in the open market, what that's going to cause is it's going to cause a huge spike. Okay. And so what these guys do is they buy just a little bit, slightly a little bit, and then the price comes down, and so they start accumulating a position as they go, and eventually they have built a position, and then they're long completely. So what this consolidation means is this is accumulation. These are hedge fund people doing these dark pool transactions, do these transactions, getting ready to build their full position. Okay. And so dark pool prints, you can use that to identify how much they're accumulating, and you can use, sometimes you can use the price at where they purchased them as support and resistance. Okay. So for example, if they buy at the bottom of a let's say a support level, and you see a big dark pool print, you can bet that they're seeing that support as well, and they're buying there so they can take it up. Okay. All right. So that's all I'm going to say about dark pools for now. We'll talk about that at the end, and how to use it, and some of the features that are offered here. So, all right. So now, where do we get this information? All right. So there are different servers or I guess different services that offer this information. They obviously have to pay fees from these exchanges to get this information, and in return, you have to pay to see this information. I actually use two. I have this one, which is on my app. This is free, but then there's also they don't have a desktop version, but it's really simple. There's a free version with ads. I bought it, I signed up when it was early, and so I think it was it's $15 a month or something, but definitely a good one to use. Cheddar Flow is another big one. I like how easy it is. And then Flow Algo, these two are very similar. You go ahead and check them out. There's really not much of a difference. I think the price, I think Flow Algo is a little bit more expensive, but a lot of these have trials, so you feel free to look that up. I use black box stocks, and I'll show you why I prefer this service. I'm not promoting it by any means, but I do invite you to check these out, right, and find whichever you want. There's other ones like Unusual Wells. If you're not following them on Twitter, I invite you to do so. It is free, but they do have some of this information. Some of the flow that they provide is delayed, and so they have a paid version where you can get them more instant. And I've heard one of our members is a member, pays for the service, and he likes it a lot. So anyway, so these are the different ones that you can use to get that information. All right. Again, any questions you have, please do so. Please just ask, and I'll be happy to answer. So, all right. So let's begin. Let's dive in a little bit more on these flow order types. Now, there are three main different order types. The first one is a block. Now, when you think about if you are a trader who works, again, you have to think about from the perspective of who's making this transaction. You're a hedge fund trader. You're a trader who works for a hedge fund, right? And you're looking at level. You're looking at the technical analysis. New Tesla hits 760, and you want to buy 500, contracts. 760 call expired this week, right? But the problem is you can't find enough people or enough. No one has that amount of contracts, right? And so sometimes you can do negotiations through banks or privately, right, with someone else. So if you don't want to do it in the market, you can go to a bank or whoever or another company who is willing to sell you those contracts, right? And so that's what the block is. The block is simply a negotiated transaction that is just not available to the average public. Okay, so as you can tell, these are good. Block contracts are good, but because they're negotiated, there's no urgency, and we'll talk about that in a minute, about why urgency is important. Then we have sweeps. Sweeps are essentially, they show a lot more momentum and a lot more urgency, and in a way that now you're back, you're the trader again, right? And you won 500 contracts of Tesla, but you want it now because there's a lot of volume. Elon just said something or whatever, right? You don't have time to go to this bank. You just want to get those filled in the open market. It doesn't matter what price, right? You just want to get in the trade as soon as possible. That is good for us, because if that person wants to get in, then that means that they know something, and we want to get in on that, right? And so we want to look for sweeps when we're looking at option flow. Okay, split is the same thing, but these are big orders, but they're filled in one single exchange, as opposed to sweeps. Sweep just is, for example, you won 500 contracts, maybe one exchange has 200, the other exchange has, can fill 50 of those contracts, but eventually you will get those 500 contracts filled. But just what it does is this sweep over all the different exchanges because you want to get it now, right? Okay. So that's the basics of the different order types when it comes to option flow. Okay. Now, the bid and the ask, these two things are very important when you're looking at option flow. Now, you want to know when a person is opening a position, right? You also want to know when the person is closing the position, right? Because if you follow the person, like it's like it's like someone saying, "Hey, I'm going to get in this trade, fill my position," and then you get in. You obviously, you don't want to wait until they close so you get out, because you need to have your own plan, right? So I'm not encouraging you to follow this, but follow your trade plan based off of this. But it's always good as a confirmation for your trading plan, right? So if you can imagine, just think about it. If you're placing an order, there are two types of orders generally that you do, either a limit order or a market order, right? So what is the market order? What is the difference between a market order and a limit order in terms of where it gets filled? If you place a market order, where are you going to get filled? On the bid or on the ask? Absolutely, right? You're not going to get, if you get a really good platform, you're going to get filled on the bid. That would be great, right? But no, you get filled on the ask, right? So when you see a transaction or a flow, and you see a trade on the ask, what is that telling you? That most likely, and I say most likely because it's not always guaranteed, most likely this person opened a position. This is open a position. Okay. Now, so that's what the market order is, right? So when you place a limit order, and especially looking at this service, if it doesn't show anything, I don't think I have one here. I think I have some filters checked out, but there will be transactions that don't have A or a B, which is blank. Most likely that was a limit order. Okay. All right. Now, when you place a market order, you get filled in on the ask, right? Now, what if you really want to get in, and you really don't care about what the price is for the contract? You want to get in as soon as possible. Well, you place an order above the ask. Obviously, if you place an order above the ask, of course you can get filled. And how fast? Very fast, right? And so when you see a trade, a trade that says above the ask, or in this case, AA, that means that may indicate an urgency to open a position, and vice versa. If you see one that says BB, or in this case is for a call, there's an urgency to close that position, meaning that you don't care if it's below the bid. I just want to get out of the position, right? So that could be this person wants to take profit, or they sense that the market is changing direction, they want to get out as soon as possible. Okay. Now, just because it says, just because a call is placed on the bid, that doesn't mean that necessarily that it's a closing position. If the ticker is moving very fast, excuse me, so let's say you place a market order, but the ticker is moving so fast that the bid and the ask is moving up, that person may have just happened to be filled at the bid, right? But that's because the market is the ticker is moving so fast, right? And so there's a lot to think about, but these are just small things. The reason why I say that is because there will be flow. There will be flow, for example, for a specific ticker. I'm just clicking a random here, 38 call. That you will see orders filled on the ask and on the bid for calls. Okay, let me click those. I'll show you guys a little bit more about this, right? So you'll have like a series of calls, and then all of a sudden you see, for example, here, calls, at the ask, bid, ask, bid, right? So it could be the same person, or but we'll talk about that in a minute. I just want to show that there are different exceptions that, as you get better with looking at flow, you'll be able to pick those things out. Okay. All right. So let's look at what a bullish flow looks like. Okay. Obviously, you want to see calls, right? You want to see lots of calls, and you want to see. So you hopefully you're not just looking at flow. You're also looking at the chart, right? Hopefully, you're looking at the chart to have levels in mind, right? Now, I have an example for a bullish flow here. This case is an AFRM. I played AFRM this morning, and I'll show you why I did that and how I use option flow as a confirmation for my trade. Okay. Now, here on the right side, this is a screenshot of the first 2 hours of trading. And this one shows, all of them shows, at the ask, above the ask, and at the bid. And it shows, you can tell you got sweeps, you got blocks. And then some of these colors, I just put a low indicator there. This software has the white, it just means that the open interest for that specific transaction has not been exceeded. So, and then yellow, that the open interest has exceeded. Remember, open interest is only updated once a day, right? And so if there's only 1,000 contracts for that's opened, currently open for that day, for that strike price, then if someone orders it 1,001, then it's going to show here as yellow. But if someone's doing a sweep, right, they couldn't get that 1,001. They're going to do it over different exchanges. Then you're going to have, it's going to show us purple because it's going to be done in multiple exchanges. Okay, so that's what the colors are. That's what the colors mean. Okay, but so now let's look at that flow while we're also looking at the chart. Now, before I did this, let's see if I can. Here's AFRM. It was on my watch list, and I was watching I love it when a ticker rallies so much and then it pulls back, because we can use these levels as profit targets, and also as levels of resistance. And it's just great. I love it when that does. I'm not too concerned if I missed a run, because you can always come back and play that bounce. Okay. All right. So here is AFRM. I was watching for these levels. So it said, here's a resistance here, here's another resistance, and here's a support that was created here. One second. So it was on my watch list, and then I started watching the flow, and And at 8:36, this is my time. I saw that it pulled back a little bit, and then I saw flow started coming in, and these 15 calls. Let me go actually to the actual. Okay, so here's the at 7:43. Someone placed an order for puts. You know, when it's that far, the strike price is that kind of that far. I don't really look at it. I'm looking at more of big money, right? So I'd rather follow someone, that placed $400,000 as opposed to someone who's just placing a total transaction of $1,000, right? And so right off the bat, we have someone at 7:44. So what? In 14 minutes, excuse me, after the market opened, someone placed a 100 call, 397 at the ask, and that was a block trade. Even though it's a block trade, it was a good amount of money, right? And so, and I was watching, and it dropped. Right? So that person was under the water, right? And so then you start looking. So this is what you will be looking for. You'll be looking for the what is going on. So someone opened here, and then looks like this. This was a call at the bid. So someone may have closed a position that was previously opened, right? But then at one point it started bouncing here. And remember, we're also looking at the chart, right? So we're looking at this. In this case, let's go back to the 30-minute. All right. Okay, here's one support. There's kind of a support, but we knew that there are a couple levels here to watch for. It bounced here, and there was a potential for a bounce, and so I already had that in mind. And as soon as I saw, oopsie. Okay, and as soon as I saw this 115 call, that drew my attention. Why? Look at the money, 800,000. 200,000. But what's more important in this case is if I were to click here on the 115 call, not only was it above the ask, but this individual, most likely, they were adding to their positions. They were adding first 1,000 contracts at 7.22, right? Then they added more, regardless of the price. Remember, this person wanted to get in as soon as possible, regardless of the price, right? So above at the ask, above the ask. So the price of this contract was increasing, but this person would still wanted to get in the position, right? So what is that? That's telling you that there's urgency. This person really thought that AFRM was going to hit 115, and look, it got pretty darn close, right? So then. So that was for me. When I saw this, that was my entry, and I was able to enter here, right? So that's an example of a bullish flow when you got consistent one after the other, boom, 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 at the ask, above the ask, at the ask, above, right? And then eventually they close that position, okay? And I think this person eventually, either they're still holding or they close the positions later on. Okay, does that make sense? Does that make sense as to what a bullish flow looks like, and how to identify it? Now, sometimes this is for if you have time to look at the screen. Day trading, this is great, right? If you're a swing trader, I mean, you have to look at more at what the expiration of these contracts are, right? So, I mean, these were expiring October 15, and so this person most likely believes that it will continue. Even I don't know, maybe after this pullback, maybe they close their position. If you continue up, we may see some 115s at the bid, right? See 115 call. Oh, that's a different contract. Yeah. So most likely this person still has their positions open, right? So tomorrow, again, this is if you're only watching one ticker, you're a day trader, you have time to look at this. Tomorrow, you'll be looking for 115 calls at the bid, right? You're going to keep that in mind tomorrow or the next day or until October 15 to get an idea of where that person thinks AFRM is going to continue. Okay. All right. So now let's look at a bearish flow. And this is one that I actually entered this position for I bought some calls, and it was before I had my this server opened, this platform open, and so I missed this information, and this information could have saved me some money. And then I could have for a loss on this flow, but it was, I missed it, right? And I should have cut sooner. But man, if I had seen the flow, I would have caught sooner, or would have changed directions very quickly. The ticker that we're talking about here is MS. And here's what I was watching. Okay, I've been watching this ticker for a while. You have it bouncing your channel that it's forming, right? And then now imagine you're trading MS and you see, look, it's breaking, right? And there are times that I do enter. I enter at the break, and then I sell if it starts losing momentum, and then I re-enter when it retests this level, and then it continues, right? In this case, this thing dropped so fast on me. I mean, less than 5 minutes. I mean, here, I was looking for the retest, and before I knew it, the next candle, boom, right? From 104, from essentially 105 to 104.3. That's 70-cent move for MS. That's a lot, right? So someone knew that either they're obviously better trader than I am. Someone knew that this big move was coming. And how do I know that? Because it was shown here on the tape. Here's MS, right? Someone bought calls like me, right? Thinking, oh, 106. That's actually what I bought about 106. Like, okay, MS doesn't move much. I'm just gonna go $1, out of the money. And I was up, I was green, and then it started dropping. It hit this, 105.3, I believe, or so, and then puts at the ask, and look at there's say. See how it's 100 strike price? Most likely, I'll bet you anything that this is one individual, okay? And look at this. This person got in at 807, and look at where it entered, right? Right after the drop, a huge drop, okay? 807, they bought 500 contracts at 195 at the ask, okay? And again, they bought some more, 11,200. And look at the price. The price of this contract is going up. Yet this person keeps going. It keeps putting more. And even after this, this drop, so I guess what, 9 o'clock, even after this drop, this person added even more. In this case, they went, above the ask, and the contracts that were open exceeded the open interest, right? So if you were to look at the open interest for this specific contract tomorrow, you'll see an increase in open interest because of these transactions that were completed, okay? So if I had seen this flow at that time, I would have cut, or I would have changed direction very quickly. But at the time, I got out of the trade, and then I was looking at AFRM, which I just showed you, and I played calls from that, right? And so that's an example of a trade, a bearish trade. But again, just because it says put, it doesn't mean that you should get in, right? I already gave you a couple of things to look for, and we'll talk about more about how to put all these together. And I'll create essentially a checklist that you can follow to find those optimum setups. Okay, I already showed you that. Okay, so here's the checklist. This is what you can take out of this workshop. So there are 3 things: size, time, and urgency. Now, I talked about that person that $1,000. That's pretty low. But then someone came in with AFRM. Here, let's see, I think already. Yeah, I mean, just here an example, right? 1,000, you know, $100,000, that's a lot of money. But then $800,000, $1.23 million. Of course, you're gonna follow that person that has a lot more money, right? Why would they put lots of money, if they didn't believe in that, right? So that's one thing you need to look for is large orders, and especially, or look for sweeps. Right? We talk about sweeps because it shows urgency. Okay. Now, the strike price and expiration date is also very important. That's actually, the section of time. But we'll talk about the price. The price is increasing and the order's still coming in. This person really didn't care how much it cost. He wanted in because he knew they was moving, right? So that is the size of that, meaning that it just kept coming in, okay? The time. If you see someone with a closer expiration, a transaction, close, for example, this Friday, today's Tuesday, let's say tomorrow you see transactions that show lots of money, right? Lots of money keeps coming in for this Friday, you can bet that this person really thinks that ticker is going to move, right? Now, let's say you see, $500,000, or let's say $1 million. Is that a lot of money? Yes, that's a lot of money, but it is for 2023. Now, are you going to follow that trade now for day trade? Probably not. I wouldn't do it, right? Why? Because this person, there's so much time that this person is thinking way ahead, right? And so you want to stick to, if you're day trading, you want to stick to something that, as if you're trading it, right? This week or 2 or 3 weeks ahead. So when you look at these flows, these are 10, 15, 924s, 917s, right? Obviously, this person could have bought some 924s, right? Or even 917s, right? But what this is telling me that this person probably thinks that there's more downside to Morgan Stanley. So we'll see tomorrow, right? But so obviously the strike price is 100, so you might hit 100, and this person might close their position. So we'll watch that tomorrow. All right. The other one is urgency. Again, sweep. Do you want to look for sweeps because they indicate that urgency. Now, again, you want to look for tickers that are transactions that are done at the ask or above the ask, right? More, you want to look for ones that are above the ask because they just show just a little bit more urgency, especially if you have them, back to back. They just show, again and again, like the one that we just showed, right? Above the ask. Anyway, that shows a lot of urgency. Okay, so you want to look for that. Now, before I started using Flow, it was just purely technical analysis, and I still do. I still use my technical analysis, but sometimes when I do a technical analysis and everything looks great, I always check to see if there's flow in this with this ticker, because think about it. If you see a technical analysis, what better confirmation is to learn that other trader who is most likely a professional trader who works for a hedge fund is also interested in that position, in that trade, right? So you want to have that confirmation too. So now sometimes I'm getting to the point that if it doesn't have any good flow, I don't trade it, even if the technical analysis is good. Obviously, there's other things that I consider, or sometimes if I'm in and I don't see enough flow or clear flow, and then the flow starts coming in after I am already in the trade, I add more to my position, right? Because it just adds a little bit more conviction. Okay. So I encourage you to start looking more at option flow and learn a little bit of how it moves and how it works. It's going to take some time, and I'll give you a little more tour about the service that I use. But try to include it in your trading activity, and I promise it's going to help you. Okay. So Darkpool prints and support and resistance levels. So let me show you some of the features that this thing has. Now, Darkpool prints, they don't come all the time. right? And they, for example, if we're here, Morgan Stanley, at 308, there was a Darkpool print of $11 million. Someone bought this many, a lot of money, for, at the price of 101.91, right? Remember, we already talked about that this person, these people, or this individual bought 100 put lots of contracts for that amount of money, and then you see some Darkpool activity at this price, okay? And this is one thing that's really cool about this. You can actually add a volume profile for this. If you don't know what the volume profile is, check out my Instagram account. And I have a post that where I talk a little bit about this. We also have a book that we've shared in our server, in Talk with Traders server, also that talks a little bit about that and how to trade. But in any case, what this is just telling you, just like the volume shows the amount of the shares traded at per time, this is showing you the amount of shares traded, bought or sold at a specific price, right? So this can be used for support and resistance. So when you have here, what this is showing is these two right on top of the other, right? 101.91, most likely the same person, just at different transactions or different blocks, right? So you can already put those two together. Is that, could it be, you never know, that this person who sold this, bought these contracts, maybe the other person who is selling these contracts is the person that bought these shares, right? And so now that's what this is, in this view. But then you look at the daily, and it'll show all of the Darkpool prints at different prices on a daily chart, right? And it looks very similar to the total volume profile, right? And so you can use this as, if you want, as support and resistance, right? Here's this big amount of Darkpool prints at this price, and look at where it is, right at this resistance. Okay, same thing here. Here's this long, big rectangle, right? Most likely that was a lot of money that was purchased during Darkpool prints, and look at where it was, this consolidation phase. Okay, so what is this telling you? Remember I was telling you, these people are consolidated, they're loading up their positions before the run up. Okay, that is how you can use Darkpool prints. And that's why I zoom out a little bit more, because Darkpool prints is a little bit more of long term, right? Just because I buy just because someone spends $1 million in one share, and that doesn't mean that they think it's gonna, this ticker is gonna double in the next week, or it's gonna go up $1 the next week. No, they're thinking long term, right? So this, for example, this Darkpool print, or this accumulation of Darkpool prints, they were probably bought here. And then they bought some more here, and then bought some here, or maybe they loaded up most of them here. Who knows, right? But it's just more long term. But you can use that in conjunction with the volume profile to set your support and resistance levels. Okay. Okay. So in conclusion, we'll do a conclusion, and then we'll close it up and leave it for questions. But in conclusion, one thing that I recommend you is just to be patient. And again, I talked about how if there's no flow, don't trade it. You can follow that if you want, but how many of us actually have the patience to sit on your hands and don't do a trade all day? How many of us can do that? If you do, awesome, because that is probably the hardest thing. Once you get started, obviously, there's that you get addicted, right? So you want that fix, right? Rachel. So when you start reading flow, especially when you learn about flow, I want you to take the time to just watch the flow and don't place any trades, and just learn to get familiarized with the flow. Okay. Again, use flow as a confirmation of your own technical analysis as much as possible. But sometimes you'll see really good flow that you're not even going to look at the chart, but you're going to get in, right? If you see lots of money in, and then, for example, that flow AFRM, right? If you didn't know anything about the chart, but you saw all that flow, you should get in, right? And so maybe scalp it if you're not sure, right? Maybe get in and then look at the chart and then take profit. But I recommend you obviously do your own technical analysis. Okay, this is very important. Now, not all flow will print money. Remember, these guys are just like us in that they know only so much information, right? And sometimes they most of the time they have more than we do, but you have to remember that these people also get it wrong, right? And just like I showed you in the other one, right? This person bought calls and then MS dropped completely, so that person lost money, right? But $1,000 is nothing compared to how much the account of these guys are. Maybe you're talking about millions of dollars, right? So you have to keep that in consideration. Not every flow is going to print money, okay? But if you have a lot to flow, just like the show, most likely it will. Again, I'll just talk about that. If it doesn't have flow, I think twice in trading it, just like MS, that I just showed you. I got in, good setup, good TA setup, and then it just reversed on me. And then let's see, we got someone drawing on our board here. Okay, so now the ability to decipher or really just determine the direction of the market is going to take some time. So I really invite you to just take time and look at the flow, right? Really, it's just going to take time. One thing that I want to show you very quickly. Thanks for those lines. I don't know how to erase them, so let's see. All right, well, thank you. All right. So this specific thing, the specific service, you can have it where it just shows, let's see, only above the ask, only at or above. Sorry, actually, these. You want to show above the ask only, or at. Essentially, you just want to show open positions, right? I have used, I've tried Unusual Whales. I've tried both the paid version and the free one. We actually have the Unusual Whales in our server and our Taco Traders in our channel. We just get it, people can use it. So I have heard good things about it, but I do like this one that it has, the chart right here and the Darkpool prints. It's pretty good. What's I saying? Yeah. Anyway, so there's a lot of information here. Here, let me MS. But if you show all of the information, it might get a little bit confusing, right? Because you got A, and out they ask, and then you close bid. So it's going to take some time for you to decipher that. Some tickers, will be more cleaner than others, right? So you look at Tesla here. It's going to have a lot, right, throughout the day. You have calls and then you got puts on the bid. So there's a lot, and you can tell there was a lot of indecision for the ticker, where it was going to go. So all this choppy session is a lot of times is reflected on this, and people buying calls and then buying puts. So there's no clear direction. Okay. All right. So now I'm going to leave you for questions. We have about 5-10 minutes left. For questions, go back to the bearish side at the end. Absolutely. Let's see if I can. You mean at the end of the day? So this is showing everything for this page. Okay. Oh yeah, we're done. So yeah. So now there's time for questions. Post them on the chat, and I'd love to answer them. Any specific questions that you wanna learn. Now it doesn't have to be, if it's about the service, I can share more and separately outside of this webinar. But if you have any questions about option flow or Darkpool prints in general, please do that. Okay, so you mentioned you have the free service. Is there any other sites you may know that could be helpful for traders? So really, so unusual whales, let me see if I can go back and go through. Unusual whales, oops. That's not it. Okay, maybe we can go to our server. So when you use unusual whales, when you sign up, I have it where you can get alerts. Let's see if I can. So here is our unusual whales. Oops. I have the pay version, but it's so much to get at once. Yes, it is a lot. Okay, so here's. Okay, so here's what this unusual whales gives you, the free one. You know, this is just directly to our server, and it has, you know, you can just use this information, and that's good. It doesn't give you everything as opposed to this, right? I think what unusual whales does is they have their own filters. Each service will have their own filters. Like if it meets a certain criteria, they will post it on, you know, it'll show up, right? So, I mean, there are people who buy contract, you know, 10, 20, 40, 50 contracts, right? But if you look at some of these, I mean, these are hundreds of contracts, right? So, but then sometimes, you know, it's 200 contracts and $60,000. So what is the criteria that they're following? So each one has their own criteria. Now, unusual whales may have someone, you know, a different criteria that they follow, and in determining which flow 2%. So I think to decide which service, you need to pick one that is easier, user friendly, that you like, that you can understand, because it really doesn't matter which one you pick. It just matters, you know, that you get started looking at flow, learning how to identify, oh, this is bullish, oh man, this is bearish, or sometimes this is mixed flow. I really don't know what is going to happen, right? And so that is what's going to help you the most, and just getting yourself familiarized regardless of which service that you pick. Okay. The other thing that I like about Black Box Talks is they have a chat room too, and on their Discord, and you have some moderators as well. They're looking at the flow, and they're, you know, they have their own. I think they have trade ideas somewhere, but anyway, so it's a really good service. So, why are only certain sweeps highlighted? So the highlight is it's the color. If it's yellow, that it's just saying that the amount of contracts exceeded the open interest for that day. So if you know what open interest is, just the amount of contract that have been opened for that strike and that expiration date. So in one single transaction, the open interest was exceeded. So for example, this 98 strike price for 1022, my birthday, by the way, the 164 contracts exceeded the open interest for that specific contract. Now, just because it's yellow, it doesn't really mean that it's like, oh, this is good. It just means, you know, you could have a certain contract with a strike price and expiration that no one's really looking at, right? This is kind of an odd one to look at, 1022 and a 98 put. So maybe there's not that many contracts, and just that a very low 160 contract exceeded the open interest, right? And so that doesn't necessarily mean that's good. So where you're looking mainly is not the color, but it's just the sweep. Now, if you're looking at for example, if someone had come in with a 100, 100, and it was yellow 100 put for this 1015, then you're like, oh my goodness, you already have a good amount. So that one transaction exceeded that even more, right? So that's what that means. Okay. Any other questions? You got about 4 minutes, and then we'll let you guys go. Yeah, so the purple color is just that it exceeded the open interest, but it was done in several transactions. So that could be a good indication that is the same person doing the, you know, for example, these two are probably the same person that did a sweep. Remember when you do a sweep, you go through, you know, several exchanges. This transaction was probably done in one exchange. And then this other 929 contracts were done in a different exchange, okay? But with both of these, with a combination of both, they exceed the open interest for that day, okay? That's why you see purple here, you know, purple 100 put, that means that exceeded the already, and it was easier to get the purple ones because we already exceeded that open interest. So, all right. Well, thank you very much. Now, I do want to invite you guys to join our server if you haven't already. If you need the link, please let me know. I'm gonna create the invite here. See, let me post it right here. Please visit our server. Thank you. Please visit our server. You'll learn a little bit about us. Here's a disclaimer in terms, you know, essentially we have a public chat where we talk a little bit. We get some free flow, sometimes free trades as well, and then we have our own, you know, paid service. So I really appreciate everyone coming in. Yeah, let us know. We always have discounts, you know. Sometimes we have 30, something like 50% discounts in randomly. So please visit and check out our website, as I mentioned earlier. All righty. Well, thank you again. And happy trading. We'll see you guys in the next workshop. Again, visit our website, webinars. Check this one out. That is going to happen tomorrow. So this is a great one by our one and only Trader AC, one of our fantastic traders in our server. So, all right, have a wonderful evening. We'll see you guys in the chat.